Hi guys, got my daughters here doing their bike riding. Can I say hi?
Remembered. Hi.
Hi. Are Avery over there too?
This is a long time it was a long time since we did our bike ride, but we have done it.
Yeah. Just wanted to do a quick live stream on last day, full day of peace without going to school. But tomorrow we go back to school. At our district, we are going to be virtual. First 2 weeks of training, we're going to do a lot of training on virtual technologies and whatnot. And then we'll be doing virtual for 3 weeks with our students until Labor Day. After Labor Day, we're not sure what's going to happen yet. I think that it's going to be a very interesting year, as many teachers are aware. They're going to have a lot of unique things with our students. There's a chance that we go hybrid, where some kids will be at home and some kids will be online. Hi, Avery. Say hi to everybody. Let's do a quick video. Yeah, bike riding. Bike riding's fun, right? So, yeah, it'll be an interesting year. I've been doing a lot of videos this summer, probably 2 to 3 a week on average. So probably have to lower that a little bit to maybe 1 a week. I'll make sure to get at least 1 video a week in. There'll be some dividend updates, some different stock updates, different investing strategies, stuff that will help other teachers out. If any of you have any questions or thoughts, we got quite a few new subscribers in the summer. Got about 250 or so extra subs, so definitely appreciate everyone watching. Let me know if you have any comments or questions, and that's why I'm here to help you guys. My investing philosophy hasn't changed too much, but I think over the summer, especially over the last week when I was on vacation, I was thinking more about slightly lower dividend yields but higher dividend growths. So that should help over time in the next 10 to 20 years or so. So my goal is to be looking for companies that have about a 2 to 3% yield and about 8 to 10% annual dividend growth rate. Yeah. So a few of my other purchases that I made, like Maine, Realty, Newt, those have pretty high dividend yields, and those have gotten me to over $100 a month in monthly dividends that get paid every month. Most of the other companies I'm going to look for are quarterly payers. I'm not really caring when in the quarter they pay, although I did see some of them stagger it a little bit. So my quarterly ETFs, for instance, pay March, June, September, and December. A few of the companies I picked will not be those months, so it won't be as big ups and downs, but I'm not really considering and focusing on that. If it came down to two companies with very similar prospects, there's a chance I might pick one with a little staggered dividend, but otherwise I'm going to keep the dividends for the best companies I could find. The companies I invested in this summer, and I'm doing a future video about this, it was Visa, MasterCard. Those have very low yields but very high dividend growth rates. It's more of like a growth stock. The yields are less than 1%, but they have very high, like 15 to 20% annual dividend growth rates. So, in 20 years from now, yield on cost will be very good on those. A few others I made were AVGO or Broadcom, that has about a 4% dividend yield and about 50% growth rate the last 5 years. So it's not going to continue doing at that rate, but if it could stay 3 to 4 and about 10 to 15%, I'll definitely take that. I also did Pfizer. They're about 3% and about 6%, but I like their prospects on dealing with the virus. They might have a vaccine coming out pretty soon, and they're just an overall solid company. Also, the First National Long Island Bank, it's a local community bank. They pay 3.5% and about 8% yield growth. So all those are within the parameters that I'm looking for. The main ETF I'm going to invest heavily in the beginning of next year is VYM. That's the Vanguard High Dividend Yield stock. And that pays about 3.5% and 8% the last about 10 years or so. So that one will be one of my main focuses that have a lot of companies that I'm interested in as well. So the reason why I'm going to wait until January is I already maxed out my Roth IRA. So I've been doing covered calls on Maine, Realty, Newt, SPHD, and any of that income that comes in from those, I'm putting back into more VYM. So I'm picking up a share or two each month on that, just from the covered calls. That's about $80 a share. So it's a little boost for the long term. So I'm going to continue investing in the other companies that I just named in my wife's Roth IRA. Hopefully we can max that out. We have about $2,300 or so left in that one. So the goal is to max that out by the end of this year. The next year I'll probably put most of it into VYM and my Roth IRA and continue on those companies. I'm looking for a few other companies that are not as large, like Bank of Long Island, that are still good dividend growers, that are medium or small cap, that are not in VYM, because pretty much all the other companies that were invested were VYM as well. Intel is one that I'm thinking of too, even though it's in VYM. It's very underpriced right now, has very good dividend history, and the yield's good. And I think that there's a little bit of leeway here with the lower share price. So if you guys could know of any other smaller, middle-sized companies, not necessarily the big mega or large caps that are in VYM, that might be good for my parameters of 2 to 3% dividend yield and about 8% dividend growth rate, please let me know. If there's any other stocks, ETFs, or other investing decisions that you're thinking of, let me know in the comments and I'll help you out with those. All right, guys, have a good rest of the summer. All the teachers out there, be safe. Make sure you wear your masks. Make sure you are social distancing and all that stuff. Have a good one, guys.
Good.